Hey guys, this is Chris. Welcome back to the Stock Dads channel. In today's video, we're talking about 5 stocks I'm buying in the month of September 2022. Yes, September is historically the worst month for stocks, and this month has not been easy at all. We had some of the biggest drops since 2020 on the S&P 500 and on the NASDAQ, down 5% in a single day. But I am still a net buyer of stocks. We're going to be discussing whether these are short or long-term investments, why I'm buying these. We got some value and growth on this list. So subscribe if you haven't already, and let's get started. Number one stock on this list is BYD stock, otherwise known as BYDDY, on the OTC stock exchanges. One of the leading EV automakers in the entire world, and actually it surpassed Tesla globally for a total EVs sold in the first half of 2022. These are a mix of 100% electric vehicles and hybrids, so be aware of that. BYD, by the way, happens to be one of Warren Buffett's top investments. He got about a 3,500% return on this stock. He has been taking some profits recently. We'll talk more about that, but I still believe BYD is a great long-term investment here for a lot of reasons. So as I mentioned earlier, BYD surpassed Tesla for global sales, and we'll discuss some of the numbers here. So they grew sales of their new energy vehicles in August by 184% year over year, a 7% increase month over month, which is pretty phenomenal considering we're in a not the best economic environment right now. The company also announced it currently has a backlog of over 700,000 orders, and the current waiting time for consumers who place orders right now is 4 to 5 months. That is incredible demand. Besides being a vehicle manufacturer, BYD is actually the third largest manufacturer of batteries as well, and they're working on a partnership with Tesla actually to supply batteries to them. So they have a diversified business. When we look at financials for Q2 2022, the growth is astonishing. So these numbers are in RMB. I'll convert them and put them on the screen here. But for revenue, 84 billion and net income, 3 billion, a 67% increase and 132% increase respectively. Those are some insane numbers that once again are in fact higher than Tesla's growth rates. So a quick note on valuation for BYD, it does sit somewhere around 138 for the PE ratio, which is pricey by historical measures. The forward S&P multiple right now is around 16 to 17. So overall, yes, that is kind of high, but the average stock is not growing at a 60 to 100% growth rate for revenue and net income. So I think that BYD does have its merits here. Buffett did sell a couple million shares, and that is a big reason why a lot of people sold out of this stock in anticipation that he could be selling out his entire stake in BYD. I see this as an opportunity, and based on the charts, if you look at some of the support levels here, around 53 to 54 is a pretty good entry here. I'm looking also at that long-term trend line, which sits somewhere around, if you can get a $48 buy point, that would be optimal. But I'm not, holding my hopes up in making sure that I get the absolutely best price here. I'm starting to layer into this one. So that is stock number one. Stock number two to buy in September is going to be Perion stock. Now, Pretty Perry packs a punch. This ad tech company is about $1 billion valuation, and it's been holding up in this bear market. It's only down about 5, 6, 7% for the year, but it's still continuing to post great growth numbers. If we look at the Q2 2022 financial results, Perion posted about a 30% growth rate in revenue, and net income grew by over 100%. So this is still firing on all cylinders in a bearish environment. Their new sort technology has gotten a lot of traction. This is the best alternative to cookies in digital advertising thus far that I've seen. They have solutions for search. They're a big partner with Microsoft Bing. They have video solutions, and they have connected TV solutions. They partnered with Walmart and other e-commerce clients to drive connected TV QR code sales direct on the screen. So that's a big initiative that they're pushing. Perion Network has over $350 million in cash and no debt on their balance sheet, which is phenomenal. That's great to have in, again, a difficult economic environment. No pressure to raise money at all. In terms of valuation, there is little to no risk in my personal opinion, with a PE ratio of around 15 for a company that's growing again well above market average. Finally, with some technical analysis here, you see Perry stock is actually undergoing a weekly breakout. So this could be setting up for a powerful move higher, despite the fact that, again, the market has been tanking and tech stocks in particular have been struggling. Perry stock is showing relative strength here. This stock could have a great rest of the year, setting up for a move to 26 or even higher. Stock number 3 is Meta. A lot of people either love it or really hate it. I personally think it's a good value stock. Yes, it's not a growth stock. It posted negative growth for the first time this year, and it could be single-digit growth for the rest of the year. But I think that at this current valuation, which is around a PE ratio of 12, you're not taking that much risk for this $400 billion behemoth. Now, in terms of the chart on Facebook, it is actually pretty ugly, to be quite honest. You know, the 155 support level there held for several months here. But over the past few days, Meta unfortunately has broken that support and could see further downside in the short term. A lot of people think Facebook is going to be dead. Instagram is really struggling to copy TikTok in terms of engagement. TikTok is getting a lot of momentum with users as well as advertisers. But despite all the competition, Facebook still has almost 3 billion daily active users and well over 3.5 billion monthly active users. So its user count is still holding pretty steady in the face of adversity. I think down the line, thinking about this as a longer term investment, a year from now or 2 years from now, Facebook has a lot of upside. This is a dirt cheap multiple for this stock, a PE ratio of 12. The market average forward PE right now is again around a 17 to 18. So Facebook is trading at a 30% discount to the rest of the market. And we haven't even talked about the metaverse yet and what that could potentially mean for this stock. For the time being, I'm not even thinking about the growth opportunity there. Just simply as a value stock, I think I'm going to cut out the noise in the short term and think about how this can perform in the longer term. Moving on to stock number 4 is Nvidia, everyone's favorite semiconductor chip company. There has been a lot of news lately about semiconductor sales being banned to China, and that certainly has an impact on Nvidia's revenue to the tune of hundreds of millions of dollars. But this is a company that produces billions and billions of dollars in sales every single quarter. So while this does have an impact to Nvidia, it's not a deal breaker. Let's talk more about what this company does. Again, they produce chips that are involved in AI, so autonomous driving, that's definitely a big component. Also in gaming, data center, crypto. So this is a vital company to the prospects of our entire nation going forward for the next 5, 10 plus years. And this $300 billion company is down almost 65% from its all-time high, back at $350. And as you can see on this chart here, Nvidia is back at its 200-week, not day, but 200-week moving average. So it's at a really weak point in time right now in its long-term chart. On top of that, Nvidia is approaching its 50-month moving average as well. And that was the last area that Nvidia had a lot of support in the 120 range. So I'm really looking to capitalize on this opportunity for a potential bounce from here. And I know there's going to be some people in the comments saying that this is a foolish idea to invest in companies like Nvidia and Meta when they're all crashing. But I'm not really trying to be an owner of these stocks for 1 day or 1 week or 1 month. You know, I'm trying to invest really for a longer term time frame with these particular stocks. And stock number 5 on this list is a dividend stock. It's AEP, American Electric Power. This company boasts about a 3% dividend here, which is not too shabby. Over the past decade or so, this company has seen a meteoric rise. Now, previously I did a video on dividend stocks and what to look for, but with this company, what I really like is its dividend history. It's a very strong history. It has seen consistent increases in the dividend and paid out consistently year over year without cutting the dividend. The dividend growth rate over the past 10 years is also very solid at 5%, which is above what you might find in a Coca-Cola stock, for example, which is more about 3% growth. And according to this analysis from dividend.com, the price also tends to recover from the dividend drop after about 9 or 10 days. So that's pretty quick. And if you want to practice the dividend recapture strategy. By investing in the utility space, you're buying pretty much one of the only bull markets out there this year right now. The utility space is actually positive along with energy. Despite inflation and a recession, people will still need to pay their electric bills. So there's that. So this company will continue to do well even if the economy is not so hot. What I'm also looking at for this company is its chart. So if you look at this chart, it's been trying to break out of its all-time high around $105 per share here. I'm looking at buying shares at some support level here, maybe looking at the moving averages around the $90 to $100 range, or buying on the break of $105 on volume. You could go for shares or call options. So there you have it, guys. That's my 5 stocks to buy in September 2022. Most of these qualify as great long-term investments, and some of them do have short-term potential as well. Check out our Discord group where we have live trading, a whole academy of videos, discussions, and alerts when we buy and sell different stocks. Be sure to subscribe to Stock Dads. I'll see you in the next video. Take care.